Hey everybody, welcome to this week's podcast. It's Feb the 20th, 2026, and this is week 46 of Ag Commodity Corner Plus.
Well, this week's title is the funds continue to buy soybean contracts. Plus, we've got U.S. Supreme Court striking down Trump's tariffs. Let's get into it. More green on the screen. How many weeks have we seen green on the screen? And when I say it's a new contract high, that means the latest move is a new contract high. It's not necessarily an all-time record high or a high from last year or something like that. So it's just we hit a low, coming off those lows, and we're hitting those contract highs. And so I highlighted we've got two commodities that are waking up. One, oats. Coming out of nowhere. I don't know why, to be honest with you. If somebody can tell me, just tell me in the comments on the podcast on YouTube. And also cotton. All of a sudden waking up. And I don't know if it has to do with maybe the Supreme Court striking down Trump's tariffs. Maybe that introduces more demand that's been, weighing on cotton. So anyways, soybeans did close higher for the week, although it looks like a bearish reversal on the daily chart. But one day doesn't make a trend, so we'll get into that here shortly. Meal, again, breaking above a technical ceiling at 305.7. You livestock producers, make sure you have that feed covered. This is bullish because we closed above that 305.7 on a weekly basis. Soy oil, also new contract highs. Actually did trade at one point above 60. And then wheat. The spike in wheat just continues. This is amazing. Both Chicago and Kansas above the 200. Kansas at an 8-month high. I believe Chicago's 4 months?
Possibly.
Something like that. Minneapolis continues to lag, but it's also waking up thanks to both Chicago and Kansas. Crude, again, continually moving higher because of the U.S.-Iran tensions. We'll get into that. And then can we say that maybe there's some fun money back in the gold and silver, the old safe havens? I call them old. I can't call them safe havens, I'm sorry, but they're just not. Anyways.
Do oats know anything, Mo?
Good question. that could be a good sign for corn, to be honest with you, and we'll get into that as well. But corn, for some reason now, is the one lagging in the grain complex. Amazingly, who would have thought that? We can't write this movie if we tried. Let's get into this soybean buying binge from the funds.
Well, 2026 possibly, is off to a decent start for soybeans and a big win in terms of technicals, in terms of strong hedge fund buying, on the hope that we might see more Chinese demand and also that soy oil demand due to the new U.S. biofuel policy. But we'll get into what we heard today from the U.S. Supreme Court. But before that, just to say that without the stick of tariffs, more uncertainty has been stirred into that Chinese demand equation, especially with that big Brazilian crop coming online.
So we're not quite as high as the, November highs in that fund position, but getting close. This is still bullish, and it's because of this. So the whole 45Z new 26 biofuel policy, you can see the record RVO volumes that were expected. Could this drive for farmers in the U.S. to plant more soybeans in 26? Maybe, but you need the legislation to become law soon. If you wait till the end of March, I think that's too late because I think most farmers have made their decisions. And then this is your soybean chart for May. We're now off the May contract because first day notice for March is next Friday. So most commercials and hedge funds have rolled into either the May or July contract, and you can see that we're testing a resistance around 1060, 1070. You break that, and we've been saying it for some time, beans in the 12s, but who knows, with weather, maybe beans in the teens, that would be nice to see.
The latest and greatest for today is that the U.S. Supreme Court has ruled against Trump on his usage of the emergency 1977 emergency law, which is IEEPA, and this basically is in regards to the usage of tariffs, and they said that he has exceeded his authority. Nonetheless, he still has 5 alternate statutory tools, including sections 232, 201, 301, 122, and 338, to impose tariffs through different legal pathways. These options are limited, but nonetheless, they provide options. And there are some estimates that the US government could owe more than $175 billion in refunds to importers after the Supreme Court ruled. Trump, though, is defiant, and he said that he will sign an executive order to impose a new 10% global tariff under Section 122.
Before I go make my comments on this, I just want to go back to the soybean chart. I forgot to mention that we do finally have some dates. Trump and Xi are expected to visit between March 31st and April 2nd. So, these Trump tariffs and the fact that the Supreme Court has struck them down, does it derail any of this? My concern, knee-jerk reaction was, well, maybe if China doesn't have to deal with 150% tariffs from Trump, maybe they don't have to buy U.S. beans anymore. We knew it was all political instead of economic reasons, but I think, look, Kalshi was expecting a 73% chance that the government was going to rule against Trump. That happened. And so we got a muted response. Right? Why? Because the markets already had baked this news in. And the legal foundation has changed, but the trade strategy has not. Bottom line, tariffs are here to stay, whether you like it or not. And like Abhinav said, there's other ways he can do the workaround. Who knows whether he's going to have to pay back the $175 billion that some estimate. And then the average tariff around the world is still going to remain quite high. It's a 90-year high above 10%. And so I think it just creates more volatility at the end of the day. And that uncertainty is what's going to cause that volatility. What about the USDA Ag Outlook Forum, Abhinav?
The USDA Ag Outlook Forum seems to have been friendly for corn, neutral soybeans, bearish wheat. They forecast a switch from record 25-26 corn acreage, as we saw, to soybeans this year. So the drop in corn acreage is by about minus 4.8 million to 94 million acres. That's what they're projecting as of now. And what that does to soybean acreage is that it boosts soybean acreage by about 3.8 to 85 million, the current estimate. The cut in corn acreage, along with trendline yields, which is being projected at 183 bushels per acre, off by about minus 3.5 bushels per acre year on year. When you apply that and put all of that together, along with demand estimates, we end up with a carry-out expectation as of now of 1.837 billion bushels versus 25-26 at 2.127. And a word on the wheat acreage as well. That is expected to be slightly lower year on year at 45 million acres.
So if you look at this chart here, it's just showing you that the price of corn, beans, wheat, cotton that the USDA was forecasting is slightly higher, but take it with a grain of salt. This is a guess. Beans are higher than 1030 today. Is that the average? Not necessarily. Wheat, it's better than 5, and we're breaking out. Corn, it's better than 420. Could we get to 5? Good chance. I think this report was friendly corn. Why? Because ending stocks are lower than most expected. If you believe that the corn export pace for old crop, which is quite high right now and still up 30%, this ending stocks number at 2127, this one right here, I don't know if I can show you, but that could come down. If that comes down, that's why I used a 1.8 here. My my drawing's bad, but that means it gives you a chance for new crop to fall as well, which is, these lines down here. So I think we have a better chance today, yesterday, versus the day before to get to 5,520. That's been our target for months now, and I know that corn is lagging, but this was a friendly report, and I think you'll get your first look at new crop 26, 27 in May, and then it was neutral beans. But again, if China comes through with their buying of old crop 20 million, new crop 25 million, this number here, this 350 of old crop is too high. That number could be 250, could be 150. All of a sudden, the 355 becomes much smaller. And so there's no room for error in either the corn or the beans. You start to add a drought and a weather scare, and you got fireworks, to be honest with you. So, these were friendly reports. The wheat, unfortunately, the ending stocks at 933 doesn't help anyone. So you need to lower acres, particularly in spring, or you need a dry weather pattern. And guess what? We do have one. Before we get to that, don't forget to try our program. We have the app to help you manage through the daily noise, set your future price targets. But again, one of the things we do differently than most in the industry is when there's a change in trend technically, because we follow both the fundamentals and the technicals, we'll let you know. We'll tell you why we're getting that, why it's a technical buy signal, and where we're headed into the future. So check out our program.
Some grim news weather-wise, and like you touched upon, Mo, a massive mega fire called the Ranger Road Fire is burning across Oklahoma Panhandle and southwestern Kansas. It expanded rapidly due to fierce winds, which gusted above 60 miles per hour and record-breaking heat at over 80 degrees Fahrenheit. Only about 15% seems to have been contained as of the latest. And Mo, is this another warning regarding the drought in 2026, the 89-year drought cycle, etc.?
We've provided a bunch of warnings in past podcasts. This is just another one. Go back to 2012. Did we have any wildfires in the U.S. plains? No, we haven't had any. We've warned about how dry it's been in North America during the winter, and this is just a very sad sign. It's not good for cattle ranch. It's not good for pasture land. Make sure you have your feed covered. This thing could get ugly, folks. And guess what? NOAA is now forecasting a 3-month seasonal that's dry, hot, and warm. Remember, what did we say in past podcasts? The drought starts in the south, Texas, travels north and east. We'll see what happens. It's around the corner. And so this is wheat, and you can see it's breaking above the 200, breaking above this channel. There's a bearish channel. We've been in this bearish channel for a long time, and who knows? Could we go to $7? That would be a nice move over the next 3-4 months. But what have we said? Let this play out. Be patient. Too many phone calls. Mo, should I start selling 26? We are still at 0 because you're getting better technicals, better demand. Look, folks, last year, was China buying beans? No. Were we talking 45Z? Yeah, but we weren't even close to making it law. Were we talking E15? Yes, but, well, we've been talking E15 for years, but it wasn't close to law. Now we are. Those are 3 key reasons why we're starting to see more green on the screen.
You have the Kansas wheat chart as well.
Oh, sorry, yes. And so you can see here, there's your bearish channel, and then the market breaking above the 200 and breaking above this channel. This is a weekly close above the channel, which is very bullish. All right.
Let's talk corn futures. Corn continues to enjoy strong demand in terms of exports and demand in general. March futures are still trading below the 200-day moving average, but higher today. Some of those first day notice blues could be acting as a headwind on March futures.
So I don't think those first day notice blues, which is next Friday, February 27th, will be as bad as last year. Remember, last year we peaked in mid-February and it was game over. And when you get the first day notice, sometimes those U.S. farmers have too many March basis contracts and they have to make a decision. But I think right here, I think when the USDA provided you with a bearish report, they panic sold already. And again, they panic sold at the low, unfortunately. We've recovered some of that, but I think that's why corn is having a tough time following both the beans and the wheat higher. So I think once we get past next week, get into March, we'll start to see a better pattern in corn futures.
U.S. has now assembled its largest military force in the Middle East since the 2003 Iraq invasion. Trump said he's considering a limited military strike against Iran nonetheless.
Yeah, so whether it happens or not, who knows? I think he's trying to threaten Iran to come up with a deal. Trump has said, I'll give you 10, maybe max 15 days, end of February, maybe first week of March. So you can see here the bear channel trend trading to the upper end of the channel. Not a surprise, but this is largely geopolitics. Has nothing to do with supply and demand. So I wouldn't be surprised if we don't resolve anything over the next week that the funds could take this up to about 72. But if we get a deal sometime at the end of next week, maybe first week of March, I could see the funds taking the profits, plunging this thing, and maybe retesting that 55 low, maybe getting down into, the $50 range, which would provide a buying opportunity. But it's too late to book diesel now. Just let this go. It's still winter. We haven't gone into that summer blending season yet, so just give it more time.
Well, the latest CFTC update from as far as 17th of Feb is concerned showed more green on the screen, more buying by the funds, the grains all enjoying strong buying. So you've got corn, that net short position has been further reduced to minus 27,415, net buying of 20,795. Soybeans there. This is following on from that big buying that we saw the prior week, another 40,000 contracts odd, taking net length to 163,611. Canola as well, another 8,247 contracts, taking net length to 8,392.
Yeah, so this is good. We're almost back to even on corn. We're long canola. We've covered about 20,000 in the wheat. Now down short about 80,000 contracts. So yeah, more green on the screen. This is good news. That's why we're seeing green on the weekly quote charts. Good sign as we head into the next 3 to 4 months. I think seasonally we can continue to climb, and that's what farmers want to see. And finally, our saying, the two most powerful warriors are patience and time. Please give it time. Let this play out. Don't get so tied up in, should I, maybe I'm going to miss something. FOMO, right? We'll find out in the next 2, 3, 4 months. We still got time to book 26. I don't want to book a loss, especially the U.S. farmer. You guys still can't make a dime, whether it's corn, beans, or wheat, or cotton, or whatever the case may be. So we got time. Let's get it planted. Let's see what Mother Nature does, and then we'll go from there. But the only one that remains well above the 200-day moving average is soybeans, but you still can't make money. So think about that. Just make sure you have a backup plan called insurance. Make sure you take out insurance to cover yourself. So till next time, thanks for watching. Don't forget to subscribe to the channel, We'll see you next Friday.
Bye
For
guys.
now.